Okay, so good morning. For today, we will have basic considerations in management advisory services. So our topic for today would be subdivided into, we have strategic decisions, which is the overview or that is the overall plan of the company. It has something to do with its mission, vision, its competitive edge, and the company's goals and objectives. From the strategic decisions, we will shift to tactical or operational plans. This is the implementation phase of the objectives of the company. And after which, you also have the comparison between managerial versus financial accounting. So there are actually some differences and some similarities, but then again, there's always a need to identify the difference between the two. And finally, the ethical standards that will govern the practice of MAS, both in the Philippines and in under Institute of Management Accountants of the United States. Okay, so from the basic considerations in MAS, we start off with the definition of management advisory services. So in your handouts, we have the definition of management advisory services. So it refers to the function of providing professional advisory or consulting services. So when you say consulting services, it is the function of managerial accountants to give recommendations on the problems of the client. Recommendations pertaining to the issues that must be resolved in terms of long-term as well as short-term problems of a company. So you have the consulting services. So consultant, when you say consultancy, the end product of consultancy is actually providing a recommendation. Similar with auditing. In auditing, your end product is expression of an opinion on the fairness of financial statements. But in consultancy, your end product is actually providing a recommendation to the problems of the client. And moreover, similar to auditing, in consultancy, you must also maintain your independence, similar in auditing. So aside from that, we also have still part of the definition of MAS. The primary purpose of which is to improve the client's use of its capabilities and resources. So what are the company's capabilities? When you say capabilities, it pertains to the company's human resources. So human resources are very important in running the company. So our objective actually in human resource management is to take advantage of their skills, their competencies, as well as to improve and develop other capabilities. So that's actually part of our role. So aside from that, we also have to identify the resources that is needed to sustain the company's operations. So resources has something to do with the company's assets. It's either the current assets or the non-current assets. The current assets is actually needed for the company's profitability, the company's liquidity, and for the non-current assets is something to do with the company's profitability. So that's the capabilities and resources to achieve the objectives of the organization. The objectives of the organization is actually set in the strategic planning. In the strategic planning phase, we have the long-term goals. We set the long-term goals of the company, which is actually the objectives. So the objectives of the company has to be specific. It has to be specific, measurable, attainable, realistic, and time-bound. Okay, so moving on, we also have we have the strategic decision and management accounting. So what is our objective under strategic decision and management accounting? Our objective is actually to go over the company's mission and vision. So what is the difference between a mission and a vision? So when you say mission, it actually pertains to what we want to attain. So example is we want to become number one in the industry. So another example is we want to become the market leader is actually a mission. So from the mission, which is again what you want to attain, we also have the vision. A vision is actually an offshoot of your mission. A vision is how you foresee yourself. Example, how you foresee yourself after attaining your mission. Example is You will not foresee yourself in the future to be the leader in a provider of your specific service or of a product. So this is the difference between mission and vision. In a nutshell, a vision is the driving force that will bring out the best in you. So mission versus mission. Aside from this, you also have providing information about the sources of competitive edge. Your competitive edge is actually your core competencies. Based on Porter's 3 generic strategies, we have 3. Under the 3 strategies, we have cost leadership. So what is meant by cost leadership? Cost leadership is providing a high-quality product that is affordable. In contrast, you also have product differentiation. What is product differentiation? Product differentiation is providing a unique product. A unique product that is somewhat expensive, but because of its uniqueness, it has to be priced at a higher price than its competitors. That's product differentiation. The other one is focus. Focus is creating a highly unique product. That caters to the special field. To give a simple example on the difference among the 3 competitive edges, let's take the case of the toothpaste industry in the Philippines. In the toothpaste industry in the Philippines, we have example for cost leadership is we have Happy. So Happy is highly affordable, but it is also of quality. So it's cost leadership. Aside from that, we also have differentiation. An example of differentiation is we have Colgate as well as Close Up. Colgate has something to do with healthy teeth and gums, and Close Up has something to do with the freshness of your breath. So it can offer unique services or unique features that is only attributed to the product. So that's product differentiation. And finally, we have focus. When you say focus, catering to the special few, example is Sensodyne. Sensodyne caters to the special few, only people with sensitive gums. So those are simple examples of Porter's 3 generic strategies. As a managerial accountant, it is actually your role to help management identify what is its competitive edge. Because after identifying your competitive edge, identifying the needed resources and capabilities has to be aligned with its competitive advantage or its core competency. So as stated in your handouts, your primary role is actually to provide information that is needed for management for them to properly decide. Next phase is identifying and building resources and capabilities. So again, when you say resources, it has something to do with the company's assets. It's either current assets or the non-current assets. Under this, we have analysis. As stated earlier, is you have to match your competitive edge against the needed resources and capabilities. So what are the sources of information in relation to this area? We have, first and foremost, the primary source of information in accounting is its financial statements. Under financial statements, you have the current assets. The current assets are intended to sustain liquidity of the company. And the non-current assets is intended to sustain profitability of the company. There is a balance between liquidity and profitability. It simply depends on what is the appetite for management in relation to liquidity and profitability. The objective of managerial accountant is actually to find the balance between the two, so management can attain its desired goals and objectives stated earlier in the mission, vision, and objectives. And related to this is to also have its capabilities. The capabilities is actually the labor force. The labor force that is needed to sustain the company's operations. Okay, so that is more on the strategic decision. Strategic decision is actually made by top-level management. So if you are the managerial accountant, you are helping top-level management for the strategic decisions. And in the context, you're actually performing your function as a consultant. A consultant is not an employee of the company, but it helps management in the decision-making process. The primary client of top-level management is actually, the primary client of the consultant is actually top-level management. Okay? So after setting the company's, in this area, we have setting the company's vision, mission and objectives. The next phase is the implementation and how to attain the mission, and objectives, which is actually the second part of our discussion. It is the tactical or operational plans. The tactical or operational plans is number 2, management accountants role in implementing the strategy. When you implement the strategy, you are now performing the work of a controller. So a controller is again part of the company's plantilla. It's an employee of the company. So consultant, you are independent. But if you're an employee of the company or connected to the company, you become the controller. So as a managerial accountant, it's either you are only a consultant or a controller. So as a controller, you help in the implementation of the company's plans or the strategic decisions. So what are your functions as a controller? Let's go over. First and foremost, you help management in its functions. So basically call on the functions of management. We have planning. Okay, so we have planning, organizing, staffing, directing, and controlling. So when it comes to planning, will answer the questions what we want to happen in the future. What do we plan for the company in the future? So under this, we have the planning phase. First and foremost, you have the thinking process. Thinking process has something to do with selecting organizational goals. Again, as stated earlier, organizational goals has to be specific, measurable, attainable, realistic, and time-bound. An example of an objective is, let's say, the case of marketing. For marketing, we have to capture 20% of the target market in the next 5 years. So, in that simple example, is that specific? It's very specific because it is 20% for the next 5 years. Is it measurable? Measurable means it has to be quantified. So quantified is it's 20% of the population. So it has to be measurable. How come it needs to be measurable? Reason is, if it is measurable, it can be a basis of performance evaluation and vice versa. If it is not measurable, it cannot be a basis of performance evaluation. So it has to be quantified. Second is it has to be attainable. When you say attainable, as well as realistic, attainable and realistic are connected. So it has something to do with current resources. Example is, let's say our target population is 10 million and our desired market is 20% of the population. 20% of 10 million is actually 2 million. Question is, do we have enough resources and capabilities to attain the 2 million desired sales? So it has to be attainable and realistic. And finally, we have time-bound. What is meant by time-bound? It has to be at a given period of time. In our example earlier, let's say it is in the next 5 years. So it is specific, measurable, attainable, realistic, and time-bound. That is actually part of the planning phase, the thinking process. From the thinking process, you also have how do we attain those objectives? We lay down the tactical plans. Laying down the tactical plans actually involves setting what must be done and trying to identify how it will be done and what are the desired outcomes. Is part of the thinking process. So from the thinking process, next thing is communicating goals and how to attain them to the entire organization. Top-level management support is very important in the context of communicating the desired goals and objectives. It will improve companies' goal congruence. When you say goal congruence, it is attainment of individual goals to departmental goals, from departmental goals to overall company's goals and objectives. Okay, so this is a principle of goal congruence. So aside from that, we also have feedback. So when you say, control, the next step is control. So control is making sure that the objectives of the company are being attained. Control has something to do with performance evaluation. After the planning phase comes actual implementation. After actual implementation comes performance evaluation. So that's a control function. Control function has something to do with variance analysis, has something to do with responsibility accounting and performance evaluation. Okay, so aside from this, you also have From the control function, the purpose of control function is to identify efficiencies and inefficiencies. It is intended to improve future operations. So from the control function, we now have the feedback. The purpose of performance evaluation or variance analysis is actually to improve future operations. So what went wrong in past operations? What must be done to improve operations? So it is to attain production efficiency or overall efficiency of the company. So what is your role as managerial accountant, whether in the area of strategic planning or tactical planning? Your primary role is to provide tactical plans. Your primary role is actually to provide information needs of every level of management. So you can provide information to either top level management, middle level management, or as to rank and file. Information is very important in the context of decision making. So that was actually letter B. So the letter B, supporting managers by providing information to improve strategic planning and control decisions. So under this part of your role is also to help management, middle management in the problem solving or comparative analysis for decision making. It has something to do with relevant costing later on to be discussed at the future topic. So what is meant by scorekeeping? When you say scorekeeping, it is getting tabs, it is gathering information that will be useful in decision making. Okay, so that is the roles of the managerial accountant. And finally, one of the more important roles of the managerial accountant is to help managers identify on what really matters. So that is proper focusing. Proper focusing as examples are defective goods. What are the reasons for defects? What are reasons for returns? Customer complaints will actually require. So moving on. So after the control function of management, we have your function as a managerial accountant in the implementation of your strategies. It is actually providing information in the decision-making process. Information that is relevant, that is important, or that is useful in decision-making process. So under this, we have the three roles of management accountants for success. First and foremost is problem solving. When I say problem solving, it is the role of managerial accountant to help management what are the reasons for those problems and what are the possible solutions to resolve those problems. And part of problem solving is we have scorekeeping. Scorekeeping is gathering information, gathering relevant data that is needed in decision making. So one of your skills as a managerial accountant is actually identifying relevant information. So relevant information means it has to satisfy two areas for it to become relevant. It has to satisfy the concept of quality as well as quantity. So quality means it is sufficient enough and it is already enough that it will be used in decision making. That's for quality of the information. Quantity means not too much, not too less. It's just sufficient, it's just enough. That will suffice that will result to a good decision. Because too much information given in decision making will make it more challenging for top-level management to analyze or as well as to decide. And aside from that, you also have the last function of management is attention directing. It is actually your role to help management focus on what really matters. Examples of what needs the attention of management are we have defective goods, spoiled goods, or product returns or customer complaints. We have to identify what are the reasons for the complaints or for the defects of the products, what corrective actions must be taken in order to improve operations. So that's part of attention directing. And finally, part of this is goals to assist managers in making better decisions. So we have different decisions, emphasize those differently. So when management will perform its functions, which is again planning, organizing, stopping, directing, and controlling, this cannot be done in a sequential manner, but it is actually done and it overlaps. So what is your role as managerial accountant? It is providing information needs in the different areas of the function of management. So again, as stated earlier, it has to be done simultaneously, not sequentially. Okay, next we have how do we provide value to our customers? So letters in your handouts, enhancing value of management accounting systems by guiding managers to focus on challenges. So what are the challenges of doing business today? So we have at least 4 major concerns. We have customer focus. So it means that doing business today is no longer simply creating wealth or creating profits. It is already more on satisfying our customers. In fact, in any area of decision making or in any area of business processes, we always look at the point of view of our customer. So that's more on customer focus. Next is after customer focus, we also have the value chain and the supply chain analysis. And it means we provide high quality products to our customers. What is value chain? So when I say value chain, it is the process of producing the product from the point of purchase, the point of delivery. And in the different areas, we must identify what is value-added and non-value-added activities. Our objective is, as much as possible, only to provide value-added activities. So what is a value-added activity? A value-added activity, simply stated, is it has to satisfy at least three requirements. What are the three requirements? Number one, there should be a change in state. Example of change in state is from raw materials, it will be converted into finished goods. And from the change in state, the second one is it has to create customer satisfaction. Customer satisfaction means the customer was decided to purchase a product because he perceives value over the utilization of the product. And finally, after the third one is actually on the customer is willing to pay for it. Since the customer is willing to pay for it, it's already perceived to be a value-added activity. So what should we do to non-value-added activities? Non-value-added activities must be eliminated. But what will you do to value-added activities? Value-added activities must be made more efficient to improve profitability of the company. Okay, moving on, we have, so that's the value chain. And what is supply chain? Supply chain is the series of events that is actually logistics. So what will happen from the point of purchase of raw materials is already part of the supply chain. So from raw materials, point of purchase of raw materials, to production, to deliver the product is actually the movement of the goods. That is actually the supply chain. Okay, so from the supply chain, we have the components of the value chain. So what are the components of the value chain? We have research and development. The 6 components of the value chain. We have research and development. What is research and development? Research and development is identifying products that is needed by our customers. It has something to do with the evolution of our products and what is demanded and what is already, what is in demand, what is needed by our customers. That's part of research and development. From research and development, we also have the design of product, service, or processes. The design of the product has something to do with what the customer perceives, what the customer desires for our product. So that's actually part of the designing process. The designing process actually will result to innovation. So innovation of products. Example is your cell phone just started with the basic phone with the keypads, and then from the keypads it became the touch screen. So that's a part of the design of products, service, or process. Take note of the process. Designing is not just limited on designing the product, but it must also identify sustainability of the production process. So part of the design phase is actually designing the process. To attain production efficiency, our concentration later on is to either improve the design of the product or improve the production process. And next stage is production. Production has something to do with converting the raw materials into finished goods. So production is analysis of the different steps needed to produce the product, the final product. And from the different steps, we now identify what is value-added and what is non-value-added activities, synonymous to the concepts of activity-based costing. And next stage, we have marketing. Marketing is quite crucial because this is the mode where the company will now inform its intended users, intended customers, on the services or the product that it offers. So this is actually part of marketing. Distribution is quite important. This is delivery of the product. This is currently our customers require on-time deliveries, or they are somewhat demand for faster and quicker delivery of products. So customer waiting time has to be cut down into lesser waiting times, much as possible it should be zero, or we try to develop or we try to deliver the product even before the set deadlines. So from the distribution, we also have customer service. Customer service is the after-sale support cost or after-sale support services that is provided to our customers. So that is the value chain. So again, what is your role as managerial accountant in the value chain? Bottom line, your primary role is actually to provide information needs in the decision-making process. Next is the key success factors. For you to become successful, what must be satisfied? We have 4 identified key success factors. We have cost and efficiency, quality, time, and innovation. Our customers now are quite demanding because our customers demand for affordable products, which is actually cost and efficiency. For you to attain cost and efficiency, the production process must be highly efficient, meaning eliminating non-value-added activities. This will be fully discussed later on under strategic cost management. And aside from that, customers also require high-quality products. So during this time and age, our customers demand for high-quality product. Same with your competitors. The competitors are also waiting or are also taking opportunities to provide higher or better products. Again, examples are your cell phones. Your cell phones are constantly evolving, they're constantly improving in terms of features, in terms of audio, in terms of video capabilities. So next we have time. So time is timeliness. It's timeliness of the delivery of the desired product. So that's the third component. And finally, letter D is innovation. What is innovation? Innovation has something to do with offering different products. So our customers now hate products that are always the same. They demand for differentiation. They demand for advancements in the design of our products. That is the reason why the turnout or the turnover of cell phones is usually every after 6 months. So those are the key success factors. So in doing business today, you have to satisfy our customers by satisfying the 4 critical or the key success factors. And finally, we also have part of enhancing value of management accounting systems is continuous improvement and benchmarking. Continuous improvement simply means it's either product innovation, it's either enhancing its capabilities or the similar areas or better designs. And what's benchmarking? Benchmarking is that's identifying best practices of the market leader, if not the market leader, our competitor. So benchmarking is a humbling experience because you identify your weak areas and look for areas that needs to be improved on. Okay, so that is the subtopic number 2. That's the tactical and operational plans. So again, in a nutshell, under tactical or operational plans, your objective is simply to provide information needs of lower or middle management and lower level managers. Okay, next is the difference between managerial and financial accounting. The difference is as presented in your handouts or in our discussion is actually lifted from the IMA. IMA developed these differences. They identified these 7 key differences between managerial and financial accounting. First and foremost, we have the users of the financial statements. In the field of managerial accounting, it is intended for decision making. Since it is intended for decision making, therefore, our intended users are actually the internal users. In fact, it is top-level management, middle management, and lower-level management. In contrast, financial accounting, the purpose of financial accounting is for regulation. It is intended for external reports. So the primary recipients of financial accounting reports are, first and foremost, we have regulatory bodies such as BIR, Securities and Exchange Commission, or potential customers or potential investors. So that's for the intended users. Second is the time frame of reports. In financial accounting, the time frame of reports is more of historical basis. Why? Because by nature, financial accounting relies on transactions. Transactions by themselves are actually historical events. These are financial transactions of the company. So what do we do with our transactions? We summarize them and will be converted into financial statements. The end product of financial accounting is the financial statements, which is actually a summary of historical performance. And from the financial statements comes the role of management accounting. So the role of management accounting is to analyze the financial statements for it to become useful in our decision-making process. So managerial accounting in terms of time frame is more on emphasizes the future because again, it is more on decision-making. So aside from that, the third distinction between managerial and financial is in terms of the reports. The reports in financial accounting must be objective and verifiable. What is meant by objective and verifiable? Objective and verifiable simply means that for every transaction there should be a corresponding standard, and the standard must be followed on how the transaction must be treated and must be presented in the financial statements. So it has to be objective. And it's said to be verifiable. Verifiable is by using different methods or different accounting tools, it will give us the same result. Example of this is our computation of the net income. There are two ways of computing net income. We have the transaction method as well as the capital maintenance method. Whether we use capital maintenance method or transaction method, it should give us the same bottom line figure of the income statement. A more simple example is the statement of cash flows. In the statement of cash flows, we use direct method as well as the indirect method. So again, it will give us the same cash flow from operating activities. So from the financial accounting objective and valuable information, in managerial accounting, it emphasizes the relevance of information. What is meant by relevant information? Relevant information simply means it is useful in decision making. So that's the primary concern of managerial accounting. In terms of the reports, next is in terms of, again, in terms of the characteristic of our reports, financial accounting emphasizes precision. Precision. In contrast, managerial accounting emphasizes timeliness of information. What is the difference between precision and timeliness of information? Precision means in financial accounting, the financial statements must be subject to audit. So it means that before it is given to our stakeholders, it must be subject to audit. That's the reason why often than not, the financial statements are released after April 15, which is the filing of the income tax returns, filing with BIR, as well as filing with Securities and Exchange Commission or DTI. In contrast, in managerial accounting, decision-making is already needed at the start of the year. So let's say at the close of the current year, in financial accounting, let's say at the end of 2020, the financial statements will only be released by April 15, 2021. In contrast, in managerial accounting, by January 1st, 2021, you already need to decide. So you need to rely on the financial statements that is available by December 31, 2020. So what is important in managerial accounting is we must have the information, the latest information needed in decision making. So aside from that, managerial accounting actually sacrifices precision to attain timeliness. That's the reason why we have acceptable variances. So acceptable variances in the context that the information is still relevant to the point that it is not misleading. So that is the trade-off that we need to attain to have timeliness of information. Next is reporting. In terms of reporting, financial accounting will prepare financial reports for the entire company. So most of the time, when you prepare a complete set of financial statements, the complete set of financial statements pertain to the company's operations. Example is the income statement or balance sheet for the company for a given, for the entire company. It is very seldom that a company will prepare segmented reports. Segmented reports are not intended for external reports, but it is intended only for internal users, which is actually a support to managerial accounting reporting systems. In managerial accounting reporting systems, we allow the preparation of reports based on per department, per segment, or based on per geographical area. So that's the advantage of managerial accounting. So later on, under responsibility accounting, we will give you reports that is prepared on a departmental basis based on controllability of costs and based on controllability of revenues. Okay, next is in terms of compliance with specific standards. Financial accounting standards, specifically under the postulates, or that's PS number 1, strictly dictates that every time you prepare a complete set of financial statements, it must be in consonance with the standards, whether the full standards or the standards for SMEs or the standards for micro enterprises. In contrast, since managerial accounting is only intended for internal users, we do not strictly follow a specific set of standards. We simply follow, we only prepare reports based on what is needed by management. Okay, so in contrast, financial accounting must strictly comply with the standards, managerial accounting does not. And finally, in terms of the mandatory reporting requirements, financial accounting is mandatory because of the principle of periodicity. The principle of periodicity dictates that at least once a year, during the life of the business, the company must prepare a complete set of financial statements. That's the principle of periodicity. In contrast, in managerial accounting, we only need to prepare reports only when the need arises. If there is no need for internal reports, you are not actually required to prepare the internal reports. Okay, so that is the difference between managerial versus financial accounting. In the board exams, expect questions such as the following questions pertain to managerial accounting except or in the same manner for financial accounting, the following pertains to financial accounting except. Okay, so expect questions similar to those. Okay, next we are now in the last subtopic of our discussion. We have the ethical standards. The ethical standards that govern the Philippines is actually the ethical standards that is developed under IFAC as well as the IASB standards. So the same is applicable to managerial accountants. The only difference is if you are a managerial accountant of New Jersey, United States, you are also subject to the standards of the IMA. What was presented in your handouts is actually in addition to what is already applied in the Philippines. So this is, first and foremost, we have, okay, ayan, burahin nyo na lang, okay, ayan, mali pala yun, sorry. Next is, next subtopic, we have the difference between the treasurer and the controller. So, what is the difference between the treasurer and the controller? So, on the board, we have the basic organizational chart. In the organizational chart, we have the shareholders. For the shareholders, you have the board of directors. From the board of directors, you have the CEO. And from the CEO, Chief Executive Officer, we have three major functions. You have the CFO, COO, and the HR. The CFO has something to do with the finance side of the company, and the COO has something to do with the production and sale of the company's goods. And we also have the HR. This is management of the company's human resources. So under the CFO, we have two major functions. You have the treasurer and the controller. All functions related to managerial accounting actually are the functions of our controller. In contrast, any function that has something to do with cash collection or disbursement are actually the functions of our treasurer. So our future topics in financial management are actually the functions of our treasurer. The major distinction between the two is if the function involves cash collection or disbursement of cash, it is actually the work of our treasurer. But if the function involves either, does not involve cash collection or disbursement, it only involves utilization of the company's resources, it is actually the function of our controller. All major topics under managerial accounting are actually the functions of our controller. Okay, so that is the difference between the treasurer and the controller. So again, our keyword, if it has something to do with collection and disbursement of money, it is a function of the treasurer. But if it has something to do with the utilization of the company's resources, it is a function of our controller. The function of the controller and treasurer are very important because if any one of them will fail in the performance of their function, the finance side of the company will actually fail. Okay? So this is the difference between the treasurer and the controllership function. In your handouts, we have the detailed examples. So again, that's only the difference between the treasurer and the controller. Next, we have characteristics of managerial accounting reports. What are the characteristics of managerial accounting reports? First and foremost, we have relevance, as stated earlier. It means it is useful in decision making. Timeliness. Again, the relevance of information is highly dependent on its timeliness. Information that is late will become stale. So stale information is already useless. It will lose its relevance. Moreover, aside from that, it must also be as much as possible, although our objective is relevance of information, we also desire an accurate type of information. The reason is because if the information is erroneous, it will also lead to erroneous decision. Next is understandability. Understandability, for management to properly use the information, it has to be understood by its intended users. So usability is related to understandability. So it becomes useless if it cannot be understood by the intended users. In fact, that is the reason why the statement of cash flows from the indirect method, we have the direct method. Because when managers tend to use the indirect method, it becomes a little bit misleading because there is no actual breakdown of sources and uses of cash. In contrast, when we use the direct method, there is actually the actual collection and disbursements of cash. So this is the difference between the two, which will enhance understandability. And finally, number 5, we have conciseness. What is meant by conciseness? It means information is short yet it is complete. Okay? Okay, and finally, we have the ethical standards in MAS. So the ethical standards in MAS are, we are governed by the standards under IFAC, as well as the standards under IASB standards, which was actually adopted by the Philippines. But aside from that, in the field of managerial accounting, we also have the IMA standards. What is presented in your handouts is actually the ethical standards as generated or as designed by Institute of Management Accountants of New Jersey, United States. So under the ethical standards, you have the principles. The principles are different from the standards. When you say principles, there's only guidelines. There's only a mindset on what must be done in the conduct of your services. So under the principles, we have the four. The four are, we have honesty, fairness, objectivity, and responsibility. So honesty simply means simply being true on what you do. You do not sugarcoat any of your decisions. You do not sugarcoat any of your recommendations. That's simply honesty. Fairness and objectivity go together. When you say fairness, it simply means you consider quantitative information. Decision making is made based on your professional judgment. So it's actually fairness. Objectivity is you interpret information based on what it actually intends to provide you. So that is objectivity. And finally, responsibility. The managerial accountant should be responsible in any actions he will make. He does not blame others for failures because of his actions. Again, as stated earlier, principles of honesty, fairness, objectivity, and responsibility are only the principles. They are not yet the standards. Any violation of the principles will not constitute revocation of your certificate. In contrast, you also have the standards. The standards are the four major standards. We have competence, confidentiality, integrity, as well as credibility. So, first and foremost, we have competence. Competence means you are capable of delivering the services that is needed from you or that is expected from your client. So what are the components of competence? Competence means, number one, maintain appropriate level of professional expertise by continually developing knowledge and skills. In fact, number one is the CPD requirement. It is assumed that if you practice accounting, where in the Philippines, or you practice consultancy in other countries, you must maintain your proficiency by attaining at least satisfying the minimum CPD requirements. Same goes with CMAs. You're also required to maintain a minimum of at least 60 units in 1 year. That's again for CMAs. We have another ruling for the Philippines. And aside from, another component of competence is number two. What is number two? Perform professional duties in accordance with relevant laws, regulations, and technical standards. So it means if you're in the practice of consultancy, you have to comply with regulatory requirements. What are examples of regulatory requirements? Examples of regulatory requirements are, we have the accreditation requirements in the Philippines. Accreditation requirements in the Philippines such as, you have to be an accredited accounting teacher, you have to be accredited preparer of financial statements. In fact, in the Philippines, it is the accredited preparer of financial statements that will apply to managerial accountants or the controller. And next part of competence is number three, the information and recommendation should be accurate, clear, concise, and timely. Why? Because you are helping management in the decision-making process. So in fact, these are the characteristics of information that must be provided by the consultant to top-level management. And finally, part of competence is number four, recognize and communicate professional limitations or other constraints that would prejudice responsible judgment or successful performance of an activity. So number four, communicate professional limitations is in fact your competencies. So if you cannot deliver the expected services by the client, it is better for you to decline the engagement. It is recommended that you will just rather refer it to a more competent consultant. So your recourse is, it's either you accept the engagement but you have to do some research, or you decline the engagement. But again, of course, you also need to train in that area. So that is competence. Competence is quite important because it will actually affect the other areas of your services such as your integrity. Anyway, from competence and confidentiality, what is meant by confidentiality? Confidentiality means information is kept between you and your client. You can only divulge information only with the consent of your client. In the standards, in our standards pertaining to confidentiality, there are three areas, or there are three factors, or there are three situations that you're actually allowed to disclose confidential information. Number one is with the consent of your client. So there are no issues if the information was divulged with the consent of your client because consent was freely given. Second one is if the information is needed in a court hearing. Example is if a case was filed against you by your client and one of the evidences that is needed by the court to defend yourself is the confidential information, the courts or the Philippine laws will already allow you to disclose confidential information. And the last area is if the security of the state so requires. Examples are in terms of hearings related to money laundering. So money laundering will deal with confidential information. So since it deals with confidential information, you're actually allowed to disclose the confidential information. So again, for the three areas, number one is with the consent of our client. Number two is if it serves as an evidence in the court hearing. And finally, number three, if the security of the state so requires. Okay, or simply stated in a nutshell, if the law or if it is legally prescribed. Okay, so part of confidentiality is also the rules on, we have the Data Privacy Act. In the Philippines, the Data Privacy Act actually applies to confidentiality. So the Data Privacy Act is a more stringent and detailed law that will prohibit you disclosure of information. So you have to comply with the standards of the Data Privacy Act. So under confidentiality is, we also have number two, inform all relevant parties regarding appropriate use of confidential information. Number two is actually embodied as a component of the Data Privacy Act. When you gather information, you must notify the sources of information on where the information will be used. And then after utilizing the information, you have to inform them that it must be discarded. Those are actually direct provisions of the Data Privacy Act. As well as in number two is monitor subordinates activities to ensure compliance, because most of the time, information will leak not from top-level management, but information will actually leak from our subordinates. And part of confidentiality, the last part of confidentiality is number three, refrain from using confidential information for an ethical or legal advantage. Number three is insider trading. Insider trading happens if you use information for your own advantage. Example is you have a client. Your client is about to go initial public offering. Most of the time, if a company will go initial public offering or it's for the first time that the stocks will be traded in stock exchange, most of the time the market prices are at unaffordable levels. So with that information, you can actually manipulate, you can actually take advantage of that information and purchase the stocks of your client upon initial public offering. So that's actually part of insider trading. Insider trading is prohibited because it is a violation of the Fair Competition Act. So again, we have to avoid use of confidential information. Next of the standards is we have integrity. What is meant by integrity? Integrity will answer the question, can I trust my accountant? So first and foremost, we have mitigate actual conflict of interest. Okay, so under the standards, we have integrity. So under integrity, we have mitigate actual conflict of interest, regularly communicate with business associates to avoid apparent conflict of interest. What are conflicts of interest? Conflict of interest arises if you have a client and the client is actually a major competitor. It arises a conflict of interest because there is a possibility that trade secrets of your client will be shared against its competitor. Moreover, if you're a consultant of a company and a consultant of its major competitor, you tend to lose your integrity. You tend to lose the client tends to lose its trust over the consultant. So aside from that, you also have refrain from engaging in any conduct that would prejudice carrying out duties unethically. Number two is better known as the acts discreditable to the profession. Acts discreditable to profession are examples of this are, let's say, engaging yourself in money laundering cases or money laundering activities. So those are actually prohibited. So again, it will also have issues on your integrity. And number three, we have abstain from engaging in or supporting an activity that might discredit the profession. Okay? Next is credibility. What is meant by credibility? Each member has a responsibility to number one, communicate information fairly and objectively. Simply means you present information based on what it purports to present without even manipulating or without even circumventing the information as provided to our users. Aside from that, we also have number 2, disclose all relevant information that could reasonably be expected to influence an intended user's understanding of the report's analysis or recommendations. Simply means your open information is available. Information that was gathered is actually given to the intended users, which is actually our top level management. And finally, part of credibility is disclose delays or deficiencies in information, timeliness, or past your internal controls. Simply means you have to provide your client the reasons why information was delivered late. What are the reasons? What are the limitations? What are the issues that were encountered during the conduct of your engagement? Okay, so that is the credibility. Again, as stated earlier, the standards will actually constitute violations. So any violation of the standards will be a ground or can be a ground of revocation of your certification. Okay, and the last area of ethics related to the practice of managerial accountant is resolution of ethical conflict. So in the resolution of ethical conflict, we have the different stages of resolving the conflict. First and foremost, as stated in the discussion in your handouts, if you are the controller and you have issues with your CFO, okay, you have to report. If you are the controller and the person doing an ethical behavior is, let's say, the marketing department, the standards dictate that you must first talk to your immediate superior. Do not go directly to the person doing that ethical behavior. So you have to, from the controller, you have to report to your supervisor. From your supervisor, he will talk to the supervisor of the one doing the anomaly, and they will resolve the issue. That's the protocol. What if the person doing the questionable deeds is the CFO? What is your recourse? Your recourse is to talk to the person higher than the CFO, which is actually the CEO. So, again, what if the controller has issues with or was not able to resolve the issue with the CEO? What is the recourse of our controller? It is the recourse of the controller to talk to the board of directors, specifically to the independent BOD. The independent board of director is the head of the audit committee. So just in case the controller was not able to satisfy or to resolve the issue as reported under the independent BOD, what is the recourse of the controller? It is already suggested with the standards that the controller or the managerial accountant will not report external government agencies. So in your handouts, after the number one approach or the number one guideline comes number 2. Number 2 is clarify relevant ethical issues by initiating a confidential discussion with IMA ethics counselor or other impartial advisor. Impartial advisor such as government bodies, regulatory bodies such as SEC, BIR, or you can even go to our, let's say, NBI. And finally, number 3, consult your attorney as a legal obligation and rights concerning the ethical conflict. This happens if you were not able to resolve the issues, as stated earlier, within the bounds of the company. It's better for you to protect yourself and seek for legal actions and seek for legal advice. Okay, so what is the difference between the line and staff function? So when you say line function, they are directly responsible in attaining one of the company's goals or objective. So it's a line function. In contrast, what is a staff function? The literal meaning of staff means support. So a staff function is intended to provide support to the line managers. So in the given organizational chart, which of the following is a line function and which of the following is a staff function? So first and foremost, we have the CFO, or under the CFO, we have the two functions, the treasurer and the controller. So who is line and who is staff between the two? The treasurer is responsible in managing the cash position of the company. Since he's responsible in managing the cash position of the company, he's actually a line function. In contrast, the controller is responsible in utilizing the resources of the company. Proper utilization of resources to help management or to help the company generate more cash is actually a function of a staff. So it is a staff function. How about the CFO himself? The CFO himself, considering his position, he is responsible in the finance side of the company. So, direct attainment of a goal, so CFO is actually a line position. However, how about the positions under the COO? Production. What is the objective of production manager? The objective of production manager is to attain production efficiency to produce high quality products that will satisfy our customers. So the production is actually a line function. How about marketing? Marketing, the purpose or the objective of marketing is to capture the desired market. Since it is to attain or to capture the market, again, that's part of the objectives of the company. That is in fact a line function. So although the production manager and marketing manager belong to or under the COO, both are still considered as line function. So the way to identify what is line and staff is if they are responsible in attaining any of the objectives of the company. Same goes with the COO. The COO is actually a line function because they're responsible for logistics. From the point of purchase of raw materials to production to the point of sale is actually a line function. And finally, we have the HR. The HR is responsible in hiring labor force for the different areas in the company. So the human resource manager is actually a staff function. However, as far as the CEO is concerned, all these functions under him are all his staff. So it means line and staff function is also the level of position will identify whether you're a line or staff function. But again, if the problem is silent or the usual analysis of what is line and staff, these are actually the classifications. Okay, so we start with the multiple choice questions. Okay, so for the multiple choice questions, number 1, the primary purpose of management advisory services is number 1. The primary purpose of management advisory services is, our purpose is to provide our recommendations to our client as discussed earlier in the definition of what the MAS is all about. So on the given choices, answer was actually letter C. This is in fact the definition of management advisory services, to improve the client's use of its capabilities and resources to achieve the objectives of the organization. The multiple choice questions. So number 1, the primary purpose of management advisory services is, as discussed earlier, the primary purpose of management advisory services is actually to provide your recommendation to a possible solution to the problem of your client. And based on the definition itself, the answer number 1 was letter C, to improve the client's use of its capabilities and resources to achieve the objectives of the organization.